Good morning everyone and welcome to Morning Markets, where the team at True Potential bring you up to date with what's been happening in asset markets over the past 24 hours. Today we'll focus in on the volatility that we saw in equity markets yesterday. Looking at global equity markets yesterday, we saw the major indices down over 3% in the course of the day. Everything from Europe through to the US, and both the S&P 500 and the Nasdaq down over 3%. That was driven by an increased focus on rising COVID-19 infection rates, something that we have been discussing over the past number of weeks, and in particular the increased measures that a number of governments were going to take to reduce movement. And that feeds into equity markets in particular because it impacts activity, it impacts economic activity, and that has a negative impact on the overall growth that we would be likely to see. So yesterday we heard from both the leaders in Germany and France of some of the additional measures that they would be taking, albeit not going back to a similar level of lockdown as we saw earlier in this year, but taking quite significant measures to curtail activity, which will have an impact on economic activity. We've already started to see some of this. We discussed over the past number of weeks how we've seen purchasing managers' indices decline, particularly that related to the service industry over the past 4 weeks, and that will run its way through. I think the other thing that the market did focus in on yesterday was COVID-19 in the US and just the rising infection rate that we were seeing there, taking us back to the similar levels and trends that we were seeing back in June of this year. And if we cast our minds back to then, that's when we last saw a market environment that we've just seen over the past couple of days, with weaker equity markets and VIX, which is the implied volatility, increasing. So VIX moved up to about 40 yesterday, taking us again back to those levels that we saw in June. The other side of that is that we did see a better market environment for some asset classes yesterday, and that again speaks to the benefits of diversification. So bonds, for example, sovereign bonds, they didn't really change on the course of the day. We might have expected them to move a little bit stronger. They didn't change over the course of the day. So again, speaking to the need to have diversification in your portfolio. Also, just overnight, thinking about that backdrop that we've discussed in US and also in Europe, one may have expected that to feed through into quite a negative environment in Asia overnight. That wasn't the case, and indeed we saw some Asian markets up on the day. So that again speaks to a number of the factors that we've discussed recently and over the longer term. One of diversification, which is crucial and something that we have within the True Potential portfolios, but also the different responses and how different parts of the world are further through COVID-19 and have taken different measures. And that has again been one of the factors that we've seen in this different market environment that we've seen over the past 24 hours working its way through. Today we've seen Europe open up on the day. Again, a lot of company results coming through, and these results coming through better than expected in many cases. And indeed, if we look at some of the financial sector that's reported, we've seen an improvement in results. Last quarter, we touched on significantly increasing the provision level that we'd seen in financials. That has declined with the results that they've just reported for the third quarter. So that's been a positive for the market. And indeed, we've also heard from a number of companies thinking about either reinstating their dividend or marginally increasing their dividend. Again, that's provided a different backdrop to the start of the day here in Europe. Looking ahead today, an interesting day of central bank meetings. We've had the Bank of Japan with no change to policy. We've got the ECB meeting today, and just given the backdrop that we've discussed in terms of the changes that are happening to stringency measures in a number of economies, it will be interesting to see if the ECB reference this and whether they move ahead of the implication that might have for economic growth, or they just say it's something that they're considering in terms of policy moving forward. We'll also get third quarter US GDP numbers. It'll be a large number, plus 30-something% on an annualized basis. Might grab the headlines, but it's backward looking. It's not really telling us about what is happening today and what's happening in the future in the US economy. I've no doubt that it will be used by both Biden and Trump to discuss the strengths or the weaknesses of the US economy at this point in time. This evening as well, it's going to be an important night. We get a number of the large US technology companies that have provided leadership to the market over the past number of months reporting, and we'll touch on those tomorrow in terms of the reaction that we see. That's it for today. Please join us again tomorrow.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.